Okay. See if we can get it up and actually see what people are saying.
Let's leave it a minute and see. We've got a watcher. Is it Nathan Reeves?
I think you might find it's me.
Hey, Paul John is watching. Hello. Paul, let us know if you can hear us. Put a little thumbs up or put a little comment if you can hear us, because we can't actually tell. Hey guys, that sounds good. You can hear us all right, Paul? Give us a thumbs up. Hello.
Maze is on. Hi, Maze. DT in the house.
Excellent.
Top man.
Mr. Turnbull. Excellent. So sound is good.
Everyone can hear. Nice. George is online. Hi, mate.
It's good news.
Mr. John. You've already said Mr. John.
There we go. Amazing. Right.
Well, it's nice to do one of these again, mate, isn't it?
Yes, mate.
It's been a little while.
It has been a while.
Do we need to do some disclaimers, mate, before
Yeah.
we start doing anything? I'll let you start. It's your first bit.
So yeah, welcome to Mewstone Mortgage Advice. So Nathan and myself, we are live. This is our first Facebook live event. We're really excited. We've had loads of months off of doing the live events just because of COVID and lots of things going on in our personal lives. So
Should have worn a mask.
yeah, too late, we've done that. But yeah, you know, we're back. This is the first of many live events, so yeah, we're really excited. And this month we are focusing specifically on first-time buyers.
Yeah, absolutely. So before we get stuck straight in, as I say, we're doing it live so people can watch later if people can't get on the event. So hopefully it helps out a few people, gives a few ideas, or if anyone knows anyone that needs help as a first-time buyer or wants to share some hints and tips, this is what this is all about. I'll stress from the word go, we're not giving specific advice at the minute, guys. This is just based on some market knowledge, really, to give you some inside tips and help to move things forward.
Yeah, it's all about giving you guys free information, not specific advice, but we just want to share our expertise of working in the crazy housing market and industry that we've chosen to work in, and help arm first-time buyers with as much information as knowledge as possible. So yeah, mortgage advice, you know, the key disclaimers is your home will be repossessed if you don't keep up repayments on your mortgage. We do charge fees for mortgage advice. A typical fee is $399. That's all the official stuff out of the way. We've got access to the whole of the market. And that's about it, I think, isn't it, mate? Yeah.
So let's start off with first-time buyers, because some people actually still get confused with what a first-time buyer is. So yeah. What is a first-time buyer, mate?
So for us, a first-time buyer is somebody that has never owned a property before in the UK. That would be my way of classifying a first-time buyer. We do get lots of people that think, I haven't owned a property for 10 years, I'm therefore classed as a first-time buyer, but
doesn't quite work like that.
No.
Well, to be fair, some banks might actually class you as that, but as far as the government are concerned, solicitors, legals, they will probably say you are not.
Yeah,
so
exactly.
If you've ever owned a house in the UK, you are not a first-time buyer.
Yeah, exactly. I think some lenders might not really be too bothered if you're a first-time buyer or if you've owned a property before or not, and they'll offer you a specific mortgage deal regardless of your situation. But when we're talking about things like government schemes, incentives and stuff like that, we're talking about people that have never ever owned a property before. And
we, in the post that we put out, we said we were going to cover off a few things. We're not going to go full tilt into major depth on some of these topics because, to be honest, things like the government's Help to Buy equity loan scheme, there's quite a lot to that. So I think we'll probably end up, if people are interested and want to know more, we'll probably do another one of these events based purely on that, because it's quite a lot to talk about, isn't it?
Yeah,
so
absolutely, yeah.
We're going to quickly touch through a few of the following things. So we're going to take a look at some lifetime ISAs and deposits, 95% mortgages, Help to Buy, shared ownership, family gifted deposits, the housing market, making an offer, viewing properties and buying new builds. So there's some of the things we're going to strike off today. If anyone's got any questions, put them on the chat or message them direct later. What we'll do when the video's finished, we'll probably put our contact details, mate, on there. So if anyone does have any questions or want to book a specific appointment to discuss anything, you can. Again, this isn't about using us specifically, but if you want to, you're more than welcome to. But apart from that, should we get cracking?
Yeah, I think so, yeah. And what we're going to do is probably over the course of the coming weeks, we'll be posting out little snippets of this videos because we do tend to waffle on just a little bit. It's probably going to be about an hour today. And we will end up, putting it down into bite-sized little videos so you can digest it and not having to listen to us waffle on for hours and hours. So, should we...
make a start. So first thing we put on the group was about lifetime ISAs. And well, let's start. What is a lifetime ISA?
Yeah, so a savings account is probably the easiest way of explaining it. So there used to be, up until 18 months ago roughly, losing track of time, the Help to Buy ISA, which kind of did what it said on the tin. It was an ISA, an individual savings account that had specifically been set up to help people get on the property ladder. Now the lifetime ISA has kind of replaced that now, and it's not necessarily for specifically for buying property. There are other reasons that you can use a lifetime ISA. But for the purposes of today, we're going to talk about it for buying property, because that's what it's all about.
We'll stay mortgage specific just on today. But again, guys, if people want to know more, then we'll focus on a particular topic. This is just to gauge a bit of an idea of what it is about, because some of these guys watching or may watch later on won't have a clue about any of this. So again, this is just free information. So a few little bits and tips on lifetime ISAs to be aware of. So age groups. So with a lifetime ISA, kind of comes with the territory. You've got to be 18 plus to be able to open one, and you need to be under the age of 40 or made your first payment before the age of 40 in order to sort of qualify for this. The 25% bonus from the government, so whatever money you put in your own savings, the government are going to put 25% of that total into your pot of money, into your savings, up to a maximum of £1,000 per year. Do you want to add anything to that?
Yeah, I mean, it's a little bit different to how the Help to Buy ISA worked, because you could only pay a maximum of £200 per month, and that was your limit. But with this one, I don't think you're restricted to paying X amount per month. You've just got the annual limit, which is really, really good. It takes up part of your global ISA limit, if you like. So if you've already got an ISA, because lots of people do already, then you've got roughly at the moment a $20,000 per year limit that you can put into an individual savings account. And if you're going to put $4,000 into your lifetime ISA, that's $4,000 of that £20,000 amount. So you've got a limit of $4,000 for the lifetime ISA, but you can still put money into other ISA accounts as well, and still do that.
I think it's important to note, when using an ISA, lifetime ISA as well, there is a purchase price limit. So it's got to be less than 450,000. I think is it 450,000? It is 450,000, isn't it?
Yep.
For limit. And also, you can't just put money in for a year, max out your maximum limit for the year, and then draw the money out. Well, you can, but you need to have it for 12 months, don't you, before you can take the money out?
Yeah. So annoyingly, if you're looking to buy a property in the next 3 months' time, you can't open a lifetime ISA today, throw your money in there, get a bonus and buy it in 3 months' time. You have to have had that lifetime ISA opened. You have to have contributed in it for a minimum of 12 months to get any kind of bonus. Equally, you can close it at any time, but you just won't get your bonus unless you've had it for 12 months. And
the other thing I get asked as well is, how do I open an ISA? Who do I use? How do I get the money out of the ISA? And very, very simply, you can use whichever bank you bank with, really, can't you? You can go. Most high street banks do lifetime ISAs.
Definitely.
And when it comes to buying a house, one of the conditions is you've got to use a solicitor to for the house buying process. If I'd be surprised if anyone didn't use a solicitor for the house buying process, but they also manage all of the money side of things too. So they will actually apply to the government to get this bonus and allow you to sort of add it to your overall deposit.
Yeah.
Anything else you want to?
Yeah, you've got to. So like you're saying, loads of customers ask, right, well, I can't see my bonus, or when do I get my bonus? How do I deal with that? And the simple answer is, when you're buying a property, as Nate said, you need to have a solicitor or a conveyancer. Your solicitor will obtain that bonus money from the government on your behalf, so you don't need to deal with any of that. It's all done for you. But it's a great way of getting free money. It's as simple as that. So if you're looking at buying a property in the next 12 months' time, open up a lifetime ISA, start contributing some money in there, and you will have some free money from the government. It's probably worth mentioning, I don't think we mentioned about the age restrictions, did we? Did you mention about that?
Yeah. So over the age of 18 plus and then under the age of 40.
Under the age of 40.
Yeah, you've got to make your first payment before the age of 40. But
Yes.
you can actually keep paying into it until you're older than that, can't you? You
Yeah.
keep paying, is it like 50 or 60?
Up to 50.
50.
Yeah.
So again, not many first time buyers get to that sort of age.
I don't know. Nowadays, it's not uncommon, is it? But
no, well, I guess most of mine are between the age of 20 and 40. I get a lot of. Rarely. But yeah, just so you know. But again, if people want to know more, just come back to us. I was trying to put a waving signal to Claire, but I couldn't find the emoji, so hi Claire. And is that enough on Help to Buy ISAs?
Yeah.
Do you think people are bored of us waffling that Help to Buy
Yeah,
ISAs?
probably. I'd probably say
I know what people really want to know, so let's move on to 95% mortgages, mate.
Yeah,
and this
cool.
has come up a lot.
Yeah, definitely. So I think in the wake of COVID, before COVID came along, 95% mortgages were really, really normal, commonplace, really, really competitive, not particularly challenging to get hold of. But as COVID struck, lenders reacted, and what they kind of did is they insisted that customers were having to put in much bigger deposits. So 10% deposit, 15% deposit, right at the peak of COVID when it first bit, some lenders were even 40% deposits. So it just went into complete meltdown. So the government have kind of realised that, look, we need to get first-time buyers on the property ladder, and first-time buyers are struggling. One, because house prices are high against wages, and also lenders are insisting on much bigger deposits, and it's just not achievable for first-time buyers to be able to do all of these things. So the government has stepped in and they've brought in like a mortgage guarantee type scheme, and what that really means for a first-time buyer or for a customer, it's more about being able to get a mortgage with a 5% deposit. From a lender's perspective, the government scheme is there to protect the lender. So worst case scenario, they take the house back off you. It means that the lender is guaranteed they get their money back. So we don't really need to talk about that too much. But the good news is there are more and more lenders that are coming to the marketplace with 5% deposit mortgages, and that's what people need.
That's quite a few now. I know when it first started out, there was a long list of people every day, is it out yet, has anything happened? And then they said they were going to launch it in early April, and actually it was sort of mid to late April we started seeing some of these 95% coming back in. And I guess it might be worth mentioning as well what 95%, what loan to value is, what 95%
what does it mean
is, what does it mean. So the way that mortgage lenders structure, or banks, building societies, the way they structure their mortgage interest rates, if you like. So if you have a 5% deposit, you would need a 95% what they call loan to value mortgage. So how much mortgage you're borrowing against the house's value. To get to the next interest bracket down, you would need to get to the next sort of 5%. So you would need to put in a 10% deposit and get a 90% loan to value mortgage, and then 15%, 85%, and so on and so on and so on. So sometimes it's worth putting in an extra couple of quid if you can get to that next interest rate banding down. But what I will say is the bigger deposit you have, the cheaper the interest rate will be reflected in that. So the more hurt money, the cheaper the rate will be. But yeah, in terms of 95% and loan to value, that's kind of how banks structure things and how they target their interest rate products, if you like.
Yeah, definitely. So loan to value always sounds really confusing, and we try not to talk about loan to value to customers because it doesn't really mean anything. But effectively, it's the amount of your loan against the value of your property. So, if you've got a 95% loan to value mortgage, the loan is 95% of the value of your mortgage.
Just to make things a little bit more complex, I say some banks do 95% mortgages, but without actually taking part in the government-backed scheme. So if they do use the government-backed scheme, there's actually a maximum purchase price, isn't there?
Yeah.
Not that I get many first-time buyers that are fortunate enough position to get up to £600,000, but just be mindful if people that are in London areas, if you are looking, or South East that are looking at it, some first-time buyer properties like new builds and that are quite expensive.
Yeah.
If they are using a government-backed scheme, 600k is the
600,000.
Not going to get too many, but just putting it out there.
But equally, it's a lot of the lenders that are bringing out these 95% mortgages, they're not using the government-backed scheme, and that means less kind of restrictions, a bit more flexibility, rates are getting a bit more competitive. Dave Turnbull was just asking in the chat there, is there an age restriction for the government scheme? Well, there are some restrictions in place for the government-backed side of 95% mortgages. I'll have a look into if there is an age restriction, but as far as I'm aware, I don't think there is. It's all about the mortgage lenders being able to lend. We'll have a look into it, Dave. We'll come back to you. In terms of the other lenders that are not doing the government scheme, it's all about affordability. And one thing that's definitely worth mentioning about 95% mortgages, or even 90% mortgages, is that you are going to be scrutinised as a first-time buyer much, much closer than if you've got a bigger deposit. So lenders are all about kind of risk. So they're going to look at your income, they're going to look at your bank statements. But if you're looking for a 95% mortgage, then realistically you are going to be scrutinised really heavily by your bank statements, your credit reports, any borrowing that you might have. You're really going to be analysed and scrutinised heavily.
I guess the criteria gets a bit tighter, doesn't it? Banks get a bit more nervous going up to those higher loan to values, so they tend to, your credit score needs to be slightly higher, like you just said, and a few sort of criteria objections come into play. But again, that's for us to worry about. Again, we can help people with that, and again, it all comes into people start bringing up a thing about credit score, their credit files. Do I have a high enough credit score to do this sort of thing? We could spend a long time talking about this. So again, if anyone's got any questions or you want to ask later or you want to drop us an email, do, and we'll have a chat about it a bit more.
We're having some good success with the 95% mortgages as well. So
yeah, I think so.
I think initially we thought, nobody's going to be able to get these because lenders are going to be ultra strict, and don't get me wrong, they are, but we're having some really good positive feedback from lenders. They are lending, they want to lend, they want to give people these mortgages. So we're having some really good success. But a lot about what we do is we analyse customers' circumstances, credit reports, income levels, commitments before we start sending them out there looking at property. Let's also have a tally of how many times we can say because I'm doing it a lot now.
I'm saying that's my job.
Yes, it's also worth mentioning that there are a whole range of different mortgage deals with the 95% mortgages as well. So you've got 2-year fixed rates, 5-year fixed rates, 10-year fixed rates. So there are loads of different options that are out there. The interest rates are a little bit higher, but they're nothing compared to what interest rates have been in the past. They're still affordable.
It's nice to see that, because when they first launched these 95% deals, it was kind of, you were stuck with a higher interest rate for 5 years only. There wasn't really much choice, which I thought was terrible, actually. Definitely. To start with a bit of market manipulation from banks, I thought it was terrible. But it's actually nice to see a bit of variation now coming out, and people are spreading their options more, and there are more options for people to choose from, which is good to see. A fixed rate, guys, if we're referring to a fixed rate is where your monthly payment stays fixed or set for a set period of time, and you might be able to fix an interest rate for 2 years, for 3 years, for 5 years, and your payment stays exactly the same for that period of time. So I'm sorry, I know we're talking jargon sometimes. I'm just trying to explain some of the things that we're saying. If you don't know what a fixed rate is, you might not have done this before as a first time buyer or heard of what that is. So no problem. We'll go into more about that if people want to know more.
What I'm going to do as well is I'm just going to put a link into the chat which gives a bit more information from the DirectGov website, just so if people want to go and have a little bit of a look, it's available there directly in the chat, and you can have a little bit of a look. Again, it makes excellent bedtime reading. It will send you to sleep, but it is what it is.
The fun topic of mortgages.
Yeah, I'm also going to put in there about lifetime ISAs as well, just so you've got all the official government links, and then you guys can go and have a look in there at your own leisure. Hideously boring, but
whilst Mark's doing that, hopefully it's all kind of making sense what we're saying so far. Again, guys, any questions, just put it in the chat and we'll answer as many as we can, or messages after. But moving on from the 95% mortgages, because the flip side to that is, how do I boost my deposit from a 95% mortgage? And this is where other schemes come in, such as Help to Buy. So let's go through Help to Buy a little bit and talk about what this is, because I get loads and loads of customers wanting to buy new builds, purely because there's loads of new builds around at the minute.
Yeah, definitely.
Especially in the southwest where we're based, there's loads and loads of new sites coming up. I think in places like Ivy Bridge at the minute, there's like 4 or 5 new developments, Sherford, all around Plymouth.
Everywhere, Exeter.
So what is Help to Buy and how does it work? So the Help to Buy scheme's recently changed. So if you are a first-time buyer and you're on this and you're watching this, it's good news for you, because it is primarily now just for first-time buyers. So which kind of boils back to, have you ever owned a property in the UK? If you have, you probably won't qualify for this. So you must be a first-time buyer, which is a good thing, because it means that there's going to be more properties available for first-time buyers getting onto the market. And you got me saying now. We should launch a competition, mate, on just saying how many times can you say on a live video.
I'm sure I never used to do it. I'm convinced I didn't used to do it.
It's contagious. It's like yawning.
Thanks, mate. Yawn.
So how does Help to Buy work? So you put in your initial 5% deposit, and the government will effectively give you 20% of the house purchase price on top of your 5%. So in theory, you have a 25% deposit. Pros of that: the bigger the deposit, the lower the interest rate. So you'll actually find, weirdly, if you looked at 2 houses the same price, and you put down the same amount of deposit, but it just so happened that one of them you was using the Help to Buy. In fact, sometimes you could even go more expensive with a new build using the Help to Buy, and the monthly repayments, because the interest rate is lower, might actually be considerably cheaper still, even though the price tag is much higher.
Yeah. So
we can go through calculations of this if people want to. We'll spend a whole session sort of doing like for like comparisons, so you can really see how this is going to benefit you. The other change that they've made with Help to Buy is, again, depending on what region you are, they've broken it all, the country into regions now, and rather than just being you can buy a house up to X amount, they've actually broken it down per region as to how much, what the top price tag is that you can buy a house for. Not sure what the theory is behind that, or why they've done that. But
yeah, I think a lot of it is, what we've seen sort of historically is new build sites offering 4-bedroom, 5-bedroom, 6-bedroom houses, them being £600,000, which is just absolutely mental, and not those properties being unachievable for first time buyers. Not saying that 349,000 is achievable, but effectively, that some of the prices for new build properties are really, really high, and they weren't exclusively for first time buyers using the Help to Buy scheme. So I think the scheme was kind of, I would argue, is kind of being manipulated really, and boosting the housing market. So now Help to Buy is exclusively for first time buyers in the southwest. The maximum buying price $349,000. What it really does mean is there are a lot more new build properties that are available to first time buyers only, which is a good thing. Some of those properties, they cannot be purchased by people unless they're a first time buyer. So it's creating more property for first time buyers exclusively. So I think a really good thing.
And the process with Help to Buy, so how does it work? So I've already said it gives you your 20% on top of your 5% deposit. There's lots of rumours around the that 20%. So
Yeah.
the government owns 20% of my house. I'm never going to own this house outright fully. When I have to start paying this loan back, it's going to increase my monthly payments significantly. Am I going to be able to afford it? So let's get rid of a few of these myths, shall we?
Yeah.
So when you put down your, when the government gives you your 20%, the first 5 years of owning this property, that equity loan is interest free. So you don't pay anything apart from supposedly a management fee of £1 a month. You say you've never actually seen it on yours.
No. Yeah. I've done Help to Buy myself. So
Mark's done this.
I know how it works really, really well. I bought my first property using Help to Buy.
So you got your first 5 years where it's an interest, and the Help to Buy loan itself is interest only. So you're not, even when you do start repaying or sort of paying back some of this money, you are servicing just the interest. So the amount stays the same, and that works really, really well in areas, and we'll explain why. But the first 5 years, there's no interest. You just pay your £1 a month management fee. Then from year 6 onwards, this is where you've got to start paying back the equity loan. So when you start paying it back, you pay back in the first year 1.75%. An interest rate at 1.75% of the amount that you borrowed. So when you do the calculations, I don't know if it's worth actually giving you an idea of this. Just to give you an example, so let's say you were to buy a house for £200,000. You put your 25% deposit down. So £200,000 plus your 20%, which the government are giving you. So the government would put £40,000 in times 1.75%. And divide that by, I've got fat fingers, guys, sorry, times your 20% equals that, divided by 12. So that's still not working. Have you got a calculator that works?
On my phone, mate.
Yeah, do you want to use mine? Is mine not working?
No. So
this is the first BB when you try and use technology.
Let me take you.
Or I'm just rubbish at maths. One of the two. I can't work out the actual equation.
If you take out buy a property for 200,000 and you're using the Help to Buy equity loan, it's £40,000 that the government will give you. So nothing to pay for 5 years, and then at year 6 you're going to start making a monthly repayment to service that equity loan. 1.75% is the interest rate in the first year.
There you go.
£58 a month is what you could be looking at for a for a £40,000.
I was going to blame the
Help to Buy equity loan. It's worth mentioning a couple of things. So that amount can fluctuate with what's going on with the retail price index. So that can change, but it's unlikely to make any significant difference to monthly payments. But the real key thing is that monthly repayment that you're making is not reducing the amount that you owe the government. So I always describe it to my customers, you're just paying the minimum payment on your credit card. You're not actually reducing it. And in fact, you cannot make a monthly repayment to reduce that Help to Buy equity loan. What you can do is you can just keep paying it forever. So it could be 30 years down the line, you've actually cleared off your mortgage, you own 80% of the property, and that Help to Buy loan still stays there. And you can keep paying that monthly amount forever. You don't have to pay it off
at
any point.
I thought it was a 20...
No, you can pay it. You can pay that forever. Or what you can do is you can buy out the government's interest in your property. So you could do that in one big chunk, and pay off that 20%, or you can do it in two equal parts, 10% amounts. And one real key thing to look out for is that if the property goes up in value, that 20% is going to grow. If the property goes down in value, that 20% is going to drop. So at the point that you either want to sell your property or you want to buy out the government's interest in your property, they will revalue your property at that time. And whatever the property is valued by a chartered surveyor is the amount that Help to Buy equity loan stands at, and that's the amount that you need to pay to buy out the interest.
So just as a jargon buster, in summary, if you bought a house worth £200,000, after 5 years, when you start paying back that loan, don't forget, if we follow current trends of the UK housing market, hopefully your house goes up in value. You've been paying your mortgage for 5 years, so your mortgage balance is going to reduce, meaning that equity pot's getting slightly bigger. So when you go to remortgage in 5 years' time, hopefully you will, hopefully, because your mortgage balance is less, your monthly payments is going to drop. So even though you're going to start paying back the Help to Buy loan on top of your mortgage, Mark's already clarified, because I sadly couldn't use a calculator, that the monthly loan's going to be circa 50 quid a month. Hopefully your mortgage is going to drop by quite a bit more than 50 quid a month, so it really is negligible and a really cheap way of borrowing money.
Yeah, I think you just need to have a plan in place. That's one thing we always advise our customers is that you're having some money up front now that you have nothing to pay for. In 5 years' time, you're going to have to start paying for that, and you need to have a plan in place. If you want to own all of your property, you need to put a plan in place. So it could be a mixture of some savings. It could be that we remortgage and help you borrow some extra money to clear that amount off. And you can buy out the government's interest, so you are 100% homeowner. Because
another myth is the government don't always have to have a stake in your house.
No, absolutely.
So it's just to help. It's a good scheme. It's a way of getting on the ladder, not a way of the government making money.
Yeah, it's a stepping stone. Definitely.
Is it worth touching base whilst we're talking about Help to Buy? Maybe sort of a few pros and cons of new builds, because there's quite a few.
Yeah, definitely.
Myths around.
Yeah,
they're expensive. The build quality's naff. They're small. There's loads of negatives for new builds. And don't get me wrong, different builders offer different qualities of build.
Yeah.
And I think it'd be worthwhile, if you are considering a new build, maybe doing a bit of homework on that, or maybe visit a few different sites.
Yeah,
and see for yourself.
Yeah.
And you've got a new build, mate.
Yeah, I mean, when we were looking at buying a property, we explored different sites, different areas, different builders. I would say quality of build between different builders is very, very different. But a lot of the time you are paying for location, so if you want to live in a specific area and there's new builds in those areas, then you're paying for location as opposed to condition of property. And who's to say that properties that were built 30 years ago, 40 years ago have been built any better? I don't think that's the case at all. Were properties that were built 100 years ago, were they built better than what they are now? I don't think that's the case.
I mean, technology's changed, hasn't it? I think builders can build these houses quicker because the framework that they build for these houses, the technology of building these frameworks is better. The materials are different.
Yeah.
So some of the pros of the new build is they're built in such a way that they're energy efficient, so you'll find they're usually a bit warmer, they're cheaper to run. They usually have things like solar panels, so you get cheaper electricity. You often get, because of disability rules and things, you get a downstairs toilet and an upstairs toilet as standard. Doors are built certain widths.
Definitely.
You get 10-year warranties on them.
Yeah, I think just massive pluses to new builds. You've got way better efficiency for energy, without a doubt. Heat, without a doubt. Heat retention. You've got a brand new kitchen, you've got a brand new bathroom, which you can have spec'd pretty much how you want it. So when you're looking to buy your new build property, it's not uncommon for you to be able to say, I want this particular tiling, this particular shower, this kitchen unit, this kitchen surface worktop. So you can have a property almost built how you want it, and it's kind of done, it's ready to move into. So kitchens and bathrooms are always the most expensive part of buying a property. Massive pluses. And
you also get a snagging list, don't you? How long do they keep that snagging list open for now?
2 years. So different builders, slightly different rules, but effectively you've got pretty much 2 years, no questions asked. Issues with your property are replaced. There's going to be loads of backlash to that comment, I'm sure. But,
I'm sure there's people that might have it.
Dealing with a big property developer, they were pretty good. Not perfect, of course, but it's all about whoever shouts loudest gets dealt with first. So, generally speaking, if you've got issues with your property, they will put it right. And then after the 2 years, you've got a further 8 years generally under NHBC. So you've got basically a 10-year warranty on your new build property. So loads of positives for new builds. There are some negatives, of course. I would say the negatives potentially are, you get lots of talk about, the walls are really thin, I can hear the neighbours. Well,
I was wondering what you were going to say to that then.
Well, yeah. But, I used to live in a property in Peveril, which was, 120 years old. you could still hear the neighbours there. It was no different, really. But, you know, the walls, they probably are not as well soundproofed, but they're insulated so they're warmer, you know. And houses tend to be built a lot closer together nowadays. They want to fit more plots into a building site.
Depends on the builder again, though, doesn't it?
Yeah, definitely.
You could go to some luxury builders that, rather than building as many houses as they can on one plot, they'll only build so many. Don't get me wrong, they'll be more expensive, but they tend to have more land, be semi-detached or detached. But you'd pay with new builds, not always, but a lot of the time it can be a case of what you pay for is what you get, isn't it? So yeah, I know you can almost look at new build like buying a German car. You've got to spec it up a little bit. Whereas so for example, if you were to buy sort of a mainstream builder's house, I'm not going to mention any names here, but if you know who they are once you search for new builds, but you might have to pay extra money to get like turf in your garden, or for the carpets, or
taps.
Yeah,
it is like that.
But then you often get sort of things where, you know, you can add things like taps and outside bits as well whilst they're building it, can't you? With some.
Yeah, definitely. Yeah,
with some.
Lots of positives, I think. Lots of positives, definitely.
Okay, so new builds, I think we need to do, with the Help to Buy, I think we'll do a whole session on it, and we'll get some actual numbers presented up on a board so people can see how it works, what it might cost. We'll get some real live actual interest rates so people can see, based on a certain scenario, what you might be able to achieve and how that differs from buying an older property. But we'll spend a whole time, Chloe, our poor neighbours.
I've just put another link in the group into the chat as well about Help to Buy from the Gov website. So yeah, I think you can only pin one post at a time unless I'm losing the plot. But again, there's just another link in there because we seem to make a bit of a hash of explaining that, which is why we'll do a Help to Buy specific live. I think is a good idea. But yeah, Help to Buy new build, first time buyers only is the key message. A really, really good scheme. We've got lots of experience in dealing with it. So if you've got any questions about it, then we can point you in the right direction.
Mark has 3 kids, by the way. That's why I'm laughing at that comment. Not because of anything dirty like anyone might be thinking in the background when Chloe put our poor neighbours.
Absolutely, yeah, our poor neighbours.
Babies, lots of.
Yeah. Shared ownership?
Yeah, let's do it.
Yeah, because shared ownership is a scheme that's been around for a long, long time. In the 14 years I've been advising, it's always been around. Something is still really common on new build sites, but not just new build sites. So there are often shared ownership properties that were originally on a new build site and are now older properties. So yeah, a shared ownership, a really good way of summarising what shared ownership means is part by part rent. So you're going to own some of the property and you're going to rent some of the property. So it could be that you buy 50% of it now, you rent the other 50% from a housing association, and with a view to increasing your ownership in the future. And housing associations, again, sometimes like new build developers get a bit of a bad reputation for themselves, but the key thing about housing association is they are government funded, non-profit making organisations. So
it's a business, guys. I know some people think of it as like a council house, and it's not, is it, at all?
But what they cannot do is they cannot charge any interest rates or any fees that are excessive and are outside of government rules. So the government rules are set there, and the housing associations have to work within those parameters. And again, there's a really good place for shared ownership in the marketplace for first-time buyers.
I think it benefits those that you might be a person buying on your own, and because you've only got, if lenders sometimes work on what they call income multiples. So as a rule of thumb, when you're looking on like comparison sites, for example, you don't always get the same answer, and you might be thinking why. It's because they might, let's say you look at your basic pay. Some lenders might times your basic pay by 4. So you look at your annual basic pay, so let's say you're earning 20 grand, they might times that by 4. They could times it by 4.5. But if there was 2 of you earning 20 grand, they would times the combined income by 4 or 4.5, maybe even a bit higher in certain banks. So if you are a single applicant and there is only one income, it might be a good way of getting a house which you otherwise might not have been able to afford.
Yeah, definitely.
So it means that you don't get penalised quite so much, and you could get what you want without having to pay full ticket price.
I think for a lot of first-time buyers, we get lots of people that come to us and say, "Look, I can afford to pay £600 a month. I can afford to pay £100 a month.
Very common.
I just can't get a mortgage for
why
that
can't
amount.
I borrow it?
I can afford to pay it." And we totally believe that. But again, lenders have limits on how much they can lend, and a lot of that is dictated by the government and rules and regulations and stuff like that. So shared ownership doesn't necessarily allow you to buy or borrow more money, but what it does allow you to do is potentially buy a property now which is out of reach right now, so you can buy some of it now and the rest of it later when your circumstances change, when you might be earning more money, or when you might meet a partner and then they both go on the mortgage. So yeah, there's lots of, it's a real great stepping stone, and the key thing is you can actually buy the rest of it later. Whereas with Help to Buy, you can either do it all in one go or two chunks. With shared ownership, you can increase your ownership gradually via a process called staircasing, and it works well.
Excuse me.
So it could be that you only increase your ownership by 10%, 10%, etc. But you can go all the way to 100% ownership. Not with every single case, but majority of cases.
Majority of them you can.
Yeah, absolutely. So, and we can take you through the process of staircasing. It could be that you've got savings that you want to use to increase your ownership. It could be that we can do a remortgage. And for a lot of customers that we help do this, it could be that they've been in their property for a long period of time. They've actually reduced the amount of mortgage that they've got. They're still working, they're still earning just as they were before. So they can now borrow a bit more, buy another percentage of their property. And also for a lot of people, if the property's gone up in value, then they've got some equity that they've built up in the property. So it can work really, really well.
I think it's when people are looking at shared ownership, guys, as well, it's not like excuse me, I sneezed and I've got something stuck in my throat. When you go to look on Rightmove or Zoopla, some of these websites where you can actually source some of these properties, you can't just look at an older house and say, I want to use shared ownership to buy that house. It has to already be on the scheme. Yeah. So when you're looking at new builds, when you're buying new builds, more often than not, what happens is the housing association actually buys that house from the developer, and you're actually purchasing from the house or going into having a deal with the housing association rather than the builder. So sometimes you don't always see these houses advertised. So it might be worth doing some research on local housing associations and going direct to their website to try and find them. So I'm really struggling there.
Don't die.
So some of them might be, they've changed their name so much, what they're called Live West now.
Yeah,
which has been called different things. Sovereign.
Yeah.
God, there's loads.
Loads of different, loads and loads of different housing associations in the southwest. What was I going to say? One sort of thing that's definitely worth mentioning is Help to Buy is new build only, and you can use Help to Buy on any plot within that development if that development's using Help to Buy. So you could, it doesn't matter, you could choose whichever plot you want and say, I'm going to use Help to Buy, and that's fine if Help to Buy is available.
That's actually quite important, isn't it? If you some smaller developers that they might only build 4 houses, let's say, may still be able to use the Help to Buy, but it's really important to check that they're registered with Help to Buy to be able to do it that way, because they have to be. They can get registered if they're not, so you can ask them to do that, but just double check, because if you go in thinking, oh look, I can afford that because I've spoken to Mark or Nath or whoever, a different advisor, and they said that I can borrow X amount of money, if they're not registered for it and you're falling in love with it, you could be setting yourself up for a bit of a nightmare there. So
and shared ownership is a little bit different. So shared ownership is specific plots. So like Nath was saying, it could be that on a big development of, let's say, 50 houses, 4 of those houses are already owned by a housing association, and it's only those 4 plots that you can use the shared ownership scheme on. So shared ownership, you don't have as much freedom in terms of what plots on a site, but equally it could be that you've got more choice of properties because it's not just new builds. There could be second-hand shared ownership properties that become available. What I've done again in the chat for the live is I've included a link to the Southwest Help to Buy website, which will include registering your interest to see if you're eligible for schemes like Help to Buy, but also for shared ownership. So it's all in one central portal for the Southwest. There's some information on there. You can register. There's some really useful hints and tips, some stories, etc., that you can just take a look at and see what scheme might be right for you. So just put that in there. And there should be some links to properties as well that are in the area. Anything else that we think we want to add about shared?
I don't. Only, I guess, when it might be worth mentioning about the negotiation or the share price that you can afford.
Yeah.
On new builds. So when you go to buy a new build, and this might be one of the sort of major differences. Really, it's a lot easier to negotiate how much you can afford on a new build. So the minimum share you have to buy of a property is 25%. So we would encourage you to buy the biggest share you can, because the more you own, the less rent you pay, and that mortgage is going to reduce. The rent's not going to, sadly. So when you come to look at older houses, sometimes you have to buy that house for the share that's being advertised. Although you said there's sometimes potentially an option to get around that. Harder to do that.
The big thing about shared ownership is that you're going to have to go through an application process with the housing association, and what they're looking at is your affordability. So they will assess, based on government rules, how much you can potentially borrow against that property, what share price you are eligible for. Now we can help you with that. There are set government rules and we can walk you through that process. But on new builds and to a degree on resale properties, there is a bit of flexibility on the percentage you buy, but the housing association generally will insist that you buy the maximum share that you are eligible for. And there are some instances as well where you might be declined on eligibility. So for instance, if you can afford to go and buy a property on the open market without shared ownership, then you might not be accepted for a shared ownership property. Whereas a family could come along that can only afford to buy a shared ownership property, could be given a preference of being accepted over you. So there's criteria for whether you're going to be eligible for that property as well. But
that can be quite stressful, can't it?
Yeah, it's
you get multiple applications for the same house.
But we can help guide you through that process as well.
So quite a lot on shared ownership, quite a lot on Help to Buy. Moving on from that, otherwise we're going to run out of time because we do waffle. Mark's a very knowledgeable advisor, but he waffles as much as I do. So,
definitely.
So let's look at other things to consider with first-time buyers. Another topic that comes up a lot is gifted deposits.
Yeah.
So what is a gifted deposit? So your family members, sometimes even friends or blood relatives, can get involved with helping you buy a house. So another thing you can do to bump up how much deposit you have is they can actually gift you some money to put towards it, which will in turn help you get onto the property ladder. There's a few sort of caveats around that because different lenders offer different things, don't they, mate? So you can usually high street banks would want a blood relative, mum, dad, auntie, uncle, granddad, grandma, to be gifting that money. Not all banks will allow, let's say, a friend. There are some generous people out there in the world, but not always will that be accepted. So it's quite important when you get in mortgage advice that you tell your advisor really early on in the process if that's going to be a thing, because that could change their advice completely on which lender they go to. Yeah. Because not all banks will accept gifted deposits from non-family members. But it's a great way though. Bank of mum and dad's always a great one to get on the property ladder. I know myself, I wouldn't have been able to get on the property ladder if it wasn't for the help of my in-laws. When it comes to pride, guys, take your pride to one side when it comes to this. They're helping you get on the ladder. They're in a different place in their life and able to help you. So take it if it's there. If they can help you out, then take the advice. Main thing with gifted deposits. So this has come up a lot, and I've had a lot of clients.
Jenna's just commented exactly this kind of next point that we're going to make, which is about gifted deposits. We've got some things that we have to do about evidencing that deposit. So yeah, really good point to sort of raise it, really. Yeah,
so deposit, we need to prove deposits before we apply for the mortgage is the nuts and bolts of it. We need to know where that money's coming from. Not just need to know, we need to be able to document, because if we get any bank that do a case check, and they pick this case up. They need to look at it and be able to say, I know exactly where that money's coming from and I know how it got there. And it's from a legitimate source. So we would normally ask, so the first thing is we need to know who's gifting the money, what their address is, and some ID to prove who they are, but purely so we can draft up a letter that says who these people are gifting you the money, and here's the ID to prove who they are. But then we need to do a secondary document as well as the ID and the letter to show where the money's come from, because people could be doing all sorts of money laundering, cleaning money exercises to try and get rid of a bit of loose cash that they've made by illegal beings.
Yeah, I mean, ultimately we just need to evidence that it's a genuine family gift, and the only way we can do that is by having the family member show their statement to say, yeah, I've actually got this money, because unless we get that, then we can't do our job properly.
Yeah, so a typical would be, if it's in a savings account of mum and dad provides 3 months bank statements showing them regularly putting money in that account along with a gifted deposit letter and some ID. Perfect, brilliant, accept that all day long. It's where it gets a little bit more complex when it's people outside of mum and dad. But again, we can usually get away, find a way around this all the time. But it's all about evidencing it, making sure it's clear where the money's come from. Because if it's not clear, or you give banks or solicitors or us any doubt at all, that you'd be amazed at how much horrible background stuff goes on. And we just have to make sure that it's legitimate. And 99% of the time it is.
Yeah.
But
and I think going back to Jenna's question, at what point do you need to prove your deposit in the buying process? It's the beginning. So effectively, we are always checking at the very beginning, before you've even found a property and got an offer accepted, to assess your circumstances. We'll be looking at things like your income, your bank statements, your ID, but we'll also at the same time be saying to you, right, well, where's your deposit coming from? And we'll want evidence of that. So if you've got it in savings account, then we'll ask for a bank statement to evidence that. If it's coming from a family member, then we will want to see sight of that before you start a full mortgage application, before you effectively start buying that property with a mortgage. So
you don't need to pay that money at the start of the process, Jenna, just to clarify. We're just documenting it right now. So your deposit money won't come payable until you get to the point of exchanging contracts, which is after you found the house, which is after you've gone through the whole rigmarole of getting your mortgage sorted, and after the whole palaver of getting all the solicitors' paperwork all done and dusted. Once all of that's all done and where everybody's happy, that's when they'd be looking at doing what they call exchange of contract, which is where this whole thing becomes legally binding, and that's when they'll be talking deposit money with you. We haven't gone too much into the process this live video. We have done before, so the live video is still on the socials. No, they're not, are they? We'll do more of these videos about the process, how things work. We're going to run out of time to go through all that today, but this was more to give you sort of a snapshot of different schemes, different things to be aware of. But the whole home buying process, I think maybe if people want, we can do a home buying process for people.
I think
we could even tag it onto the back of the Help to Buy one if people want to see that.
Yeah, I think so.
We do. I'm saying a lot again.
That's okay.
But we, I think Help to Buy is definitely going to come up shortly, because we do lots of it in a nutshell, and I think there's a lot of people that don't know how to use it so much.
Jenna's made a really good point here about sort of the ability to save more whilst you're still going through the process of buying a property. So I mean, like the house buying process from start to finish, so from the point you get an offer accepted on a property right up to the point that you own that property and you finally get your keys. I would say normally used to take about 12 weeks. We're going to go into the housing market in a minute, but right now it's probably going to take 16 weeks from start to finish. So you're completely right, Jenny. You've got 16 weeks potentially of being able to save more money and boost more deposits. So it's a real sort of catch-22 situation. I don't have all of my money saved for deposit now. I will have it by the end when I actually need the money, which is when you get your keys. How can I kind of deal with that? The best way of dealing with that is if you can evidence maybe 80% of it, then we can speak to lenders and we can say, look, you're going to have the rest of it available at the end. Is that acceptable to you? The lenders will make a decision on that. Or you just say to a family member, look, can we borrow that money if we need it sooner from you, and we'll pay it back to you, in which case we go back to this family gifted deposit situation, and we follow the same rules. We get a gifted deposit letter, we get the ID of the person gifting the money, and we get the bank statement to show that the funds are genuinely available. We just have to be able to evidence that funds are available. What you don't need to evidence as part of a mortgage application process, which is a bit mental, is that you've got money to cover your fees. It's just about having sufficient funds available for your deposit, not for your fees. We don't have to evidence that, bizarrely.
We'll talk about it though.
Yeah, absolutely.
We'll talk about it.
We want to make sure.
We're not going to lead you into a dark hole. We will talk about it.
Hopefully that helps a bit, Jenna. But yeah, it's a real difficult situation. But ultimately, we have to be able to prove that you genuinely have access to deposit funds to be able to buy a property, and that's all due to money laundering regulations.
Any more questions, come back to us. We'll do more on it. Or again, if you want to make an appointment, we'll go through it in a bit more depth. Next point, moving on.
The housing market in 2021, absolute
Crazy.
chaos. Absolute, complete chaos.
Where do you start?
Yeah, I mean, it's a real strange one, isn't it? Because you would expect, with COVID going on still, the last thing people want to do is buy property. And I don't know if it's something that's happening specifically down here in the southwest, but I get the impression it's definitely not. But the housing market in the southwest is booming at an incredible
it's
rate.
Crazy. Agents can't keep. We do. Sadly, one of the agents has just gone, but he was watching. But agents can't seem to keep hold of a good house, can they?
It's just really busy. There's loads of buyers. There's not a lot of sellers, and that unfortunately only does one thing, which in a supply and demand market, if there's not a much supply but there's lots of demand, that is going to put house prices up, and that is absolutely what we're seeing at the moment at an alarming rate, I would say.
Down here we are. I mean, people are.
Yeah.
And I've seen houses come on the market. Someone's bought a house for $230. A week later, sold it for $245. People are getting into bidding wars. I'm getting people getting outbid quite a lot on houses. So guys, this is also something to be aware of. It's called gazumping. You can actually get gazumped on a house. So where someone comes in and just puts in a bigger offer. Some people want to stick with their guns and go with the first person that put in the right amount of money that they want to sell their house for. They don't have to stick to that, guys. Someone, if the estate agent doesn't take the house off the market and someone else who's desperate to buy a house in that area sees it, you can get outbid. So another key point that might be useful for you is once you've had your offer accepted, you've been and got your agreement in principle, you've put an offer in on a house, the estate agent's accepted it, you might want to push then to get this house off the market. Because if someone else sees it, you could end up in this horrible bidding war or just getting outbid completely.
Yeah, it's really, really tough. I think historically we would always be sort of telling, first time buyers, go with your gut if you like a property, but, you've got to play the game of poker and try and get a bit of money off the asking price, offer less and gradually increase your offer. I think in a perfect world, that's how first time buyers should be making offers on property, including new builds. The reality is in the market right now that, there's so many people that want to buy that there are lots of people that are viewing the same property. I think at the moment it's not uncommon for a property to go on the market, and on the first day of viewings there's multiple people that are going to view that property, and the estate agent quite rightly is saying, right, well, it's all about the best offer. And maybe it's sort of worth talking about estate agency a little bit. So we don't work in estate agents. We don't work for estate agents. We work for buyers, effectively. Whereas estate agents work specifically for house sellers. And it's really, really important being a first-time buyer to understand that, because an estate agent's job is to sell the property for their vendor and achieve the best price possible for that vendor. So they want to try and get as much money for the person that's selling the property as possible. Yes, they earn more commission from it, but it's not just about that. It is about doing the right job. It's a big part of it, of course. But
that's what the backlash you're going to get from estate agents.
Well, I don't think estate agents will mind, but I think the big thing is estate agents want to sell more property, and they do that by reputation of helping sellers achieve the best sell price possible. So
everyone's in the same boat, aren't they? If you're selling a house, you want maximum money for your house.
Unfortunately, it is all about money. But I think you need to be aware as a first-time buyer that the estate agent works for the seller specifically. Then you start getting all these situations that you're offering on a property that estate agent wants you to use my mortgage advisor, use my solicitor, we're buying this property through me. Well, just be aware of conflict of interest for stuff like that, I would say. But the housing market is absolutely insane at the moment.
We launched Mewstone in February.
Yeah.
And I don't think we've seen so many applicants ever.
It's just it is just really, really crazy. But I think being a first-time buyer is really challenging right now. So houses are generally going for asking price and above. I think getting money off the asking price is quite unlikely at the moment. Is that going to be the case in the future? Who knows? It's really, really difficult to know. But I think trust your instinct. If you find a property and you like it, make an offer. Don't delay. Don't waste time. But also have a ceiling on how much money you feel comfortable with. So just this week I had a lovely couple first-time buyers trying to buy their first family home. They'd seen a property that they love. They did offer more than the asking price. They did get outbid as well, unfortunately, which is crazy. But they just made sure that they got to a point that they felt that was their limit, and then they walked away.
It's about having a plan, isn't it? We if you've seen any of our previous stuff, we always bang on about being what we call mortgage ready, and the market at the minute is the way it is at the minute. It's absolutely key that you are as prepared as you possibly can be, so that if you do see that house, it's not going to stick around, guys. You just need to be in a place where you've got your decision in principle, agreement in principle, whatever one wants to call it now, but that little bit of paper that says in principle that you can get that mortgage, so that if you see a house, you can just jump on it and move quickly.
Yeah, definitely. We do have some customers that come to us, and the first thing they say is, "Hi Mark, hi Nath, I've just got my offer accepted on a property. I now need to get my mortgage sorted."
Then it's like, oh no.
And that is the worst thing. And even this week, we've had a situation with a customer that could not buy the property that they'd had an offer accepted on because they were not in the right position. So just like you said, getting mortgage ready, we do things in a very specific way where we get to know you, we get an idea of what's important to you, we understand your existing circumstances, and we help you put a plan in place. And the biggest way that we do that is by checking through all of your documentation, getting you pre-approved for a mortgage that we're confident we can deliver on before you start offering on properties. So get your mortgage pre-approved, get mortgage ready before you go and make an offer on a property, because you could be setting yourself up for a really frustrating time if you don't.
I think the other thing, it's not just houses that are changing the market at the minute. I think the market as a whole. If you're looking at buying a house, if you haven't spoken to a broker yet, speak to one. And the reason I say that is it's not just because of the housing market going nuts and you need to be mortgage ready, but also banks are changing things all the time. And one of the things that we're noticing is they're slowly adding more and more little products, if you like, that will help you potentially maybe borrow a little bit more money, which you might not have seen before if you didn't speak to a broker. So where you might get let down by going direct to a specific bank, another bank might have something that might allow you to, they might boost your affordability slightly.
Yeah.
And unless you use a broker which is whole of market, you might not know that. So there are little schemes that we're seeing creeping in that are specific to certain banks, which will help first-time buyers get on the ladder. So just be mindful when you're doing this. Get advice from a broker which has access to the whole of market. Not all brokers are, so double check that when you're out speaking to people. Me and Mark at Mewstone, we are completely independent. We are whole of market. But whether you use us, whether you use a different broker, just check that, because in today's market, I think it's important to have a plan A, a plan B, a plan C, maybe even a plan D, depending on your circumstances. So just because one lender says yes or no doesn't mean to say another one's going to decline you as well. It's all completely different. So it's all about just having a backup just in case. And especially the speed that the houses are moving at, it's really, really important now more than ever to make sure that you've got a backup plan in case. Because all that happens is the people selling the house, the vendors, if they get wind of that the mortgage application's fallen through for whatever reason, they might be very quick to slap that house back on the market again because they think they can get more money.
Yeah.
And why are they wasting their time with you trying to buy it? So, yeah, just be prepared and make sure that you're using someone who's got access to multiple whole-of-market lenders.
Definitely.
Anything else you want to add, mate,
I
before
don't think
we
so.
wrap this up?
I
Because
think,
we've done our hour
yeah.
where we can go on for a lot longer. We can talk for hours.
Yeah.
Me especially, and renowned for talking for hours. Mark's very knowledgeable about the subject. But any issues, any questions, if anybody watches this at a later date and want us to do a particular video on a certain topic, happy to do it. We're hoping to bring these live videos back. Depending on the response as to how, and family, more importantly than anything else, how often we can do them. But anything that you want to know, give us a message. But we'll come back with some more topics shortly.
Yeah, thank you very much.
But yeah, this is Mark and Nathan Mewstone, and hopefully we'll speak to you soon. Cheers, guys.